Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, May 31st, 2011. This morning we're talking about the Euro buys time, and we're just coming off of the holiday here in the U.S. yesterday, the bank holiday, so things were closed here, and we're sort of just getting back into the swing of things in the U.S., okay, but it looks like Europe's already sort of taken care of that situation, and things are moving as we speak. I'm just taking a quick look here at the Euro. You can see Euro's much higher. Back here was the 140 support that held. All right, now we're back up here, and we're now sitting just above 144 on Euro USD. Now, what's going on in the Eurozone is that they basically come out and they've set a timetable for dealing with this Greek problem. I mean, we've been talking about how they've been kicking the can down the road. Well, now they said that they're going to have a solution by the end of June. So that's a concrete timetable that's going to allow the market to have a little bit of confidence that they're going to come up with a plan here. Now, part of this whole deal is that it's commonly I guess the thought is that Germany is going to give up some concessions and some of the things that they were demanding before. They're going to sort of let go of and allow this thing. So they're not going to ask for a total restructuring of Greek debt, which is not going to induce a default. They say that the new package should be somewhere in the magnitude of about 60 billion euro, but we're going to have to see, obviously, what happens with the situation as it plays out over time. But, again, basically they're buying themselves some time. They've got a full month of June here to get this thing dealt with, and, I wouldn't be surprised to see it pop out on the last day, say right around the 4th of July holiday here in the U.S. So that's kind of what we're looking at here. One of the other things that happened in the Eurozone that was nice is that Ireland also came out and said, no, we don't need any more money, but who knows what's going to happen there. So the problems with contagion was really the big issue going on with the Eurozone. But you can see the Euro's trading higher now, 144 higher. All right, you can see Euro versus Yen here. Just take a quick peek. All right, that baby popped as well on the news, so that was a good thing. All right, so we've got pound moving higher, also in sympathy. Pound back up over 165 area here. Okay, basically we've got dollar weakness going on this morning. Major risk taking going on. Markets are higher. Stocks are up. Stock futures are up, commodities higher, oil back to 102 and change. Just to get you caught up on some of the other news here, I'm just going to go right down the line here. Aussie's higher, but it's pulling back just a little bit. Okay, in Australia, they missed their current account balance figures numbers, and also they had some private sector credit numbers came in. Basically, they had lower than expected numbers sort of across the board. So it looks like they're pulling back a little bit, which it's okay. The Aussie's been much higher. You can see here hit around 107.50 just the other day with the U.S. session closed. All right, and I just want to show you the Kiwi. Now the Kiwi's actually busted much higher. Let's look at this on the daily chart here. I think we're going to be at a new all-time high. Yes. If I go back to the weekly, let's look at this over the past a couple years, 5 years. All right, we're going to see that the Kiwi's now at a new all-time high. All right, they've actually done rather well. All right, their trade balance figures came in much better than expected, nearly double the surplus that they were looking at. Okay, exports were up, imports were down, so things look pretty good there. They also had business confidence figures came in last night, which were much better than expected. So they really bounced back there. About 30, they're twice as confident as they were last time around. So Kiwi looks pretty good right there, and also the interest rate differential. All right, because we're going to look at the loonie here. You can see that we had dollar loonie. Whoops, let's go back to the let's go back to the 30-minute chart here. All right, and I want to take a look at this from a perspective of the shorter term over the week. Dollar loonie. Okay, you can see we got up just above 98 cents, about 98, 10, 15 was about a double top right there. You can see dollar weakness pushing off against the loonie. Now they had their GDP figures came in yesterday. All right, and they showed domestic GDP growth, which was a little bit better than expected, but a little bit lower than the last time around. However, the news that's being floated is that today they're having the interest rate decision that's going to be out. And they're not expected to raise interest rates there. So, there's kind of a tale of two economies going on. First it was the Kiwi, then it was Canada, and with the earthquakes that happened in New Zealand, all right, things didn't look so hot for New Zealand. Money sort of shifted its way to Canada. Now Canada's sort of slowing down because we know the U.S. economy's slowing down. Canada is very closely tied to the U.S. All right, now that the rebuilding's taking place in New Zealand, all right, everybody's kind of moving their money back towards that way. So the Kiwi higher, loonie lower, and you can actually see it here as represented here in the 30-day chart. So that's Kiwi moving up versus the loonie as well. All right, just want to show you dollar Swissy. All right, actually, let's look at Euro Swissy. That's probably going to be better. Now, the Swiss economy looks like it's slowing down a little bit. They've had some problems with the a strong currency that they've been experiencing. Obviously, Swiss francs is a safe haven currency. Their GDP figures came in worse than expected. All right, 0.3% for the quarter versus an expectation of 0.7, and 2.4% on the year-over-year versus 3.0. So, a little bit of Swissy weakness here, and that's identified here in the Euro Swiss. All right, lastly, let's take a look at dollar yen. All right, dollar yen pushing back up towards the 82 level. Yen's rather weak. Okay, they're expecting that perhaps they're going to see some looser monetary policy moving forward. So there's a lot sort of to get through with the day closed yesterday for the Memorial Day holiday. Okay, but it looks like risk taking's back on the board for right now as the euro debt crisis fears abate a little bit. Obviously, we're going to have to see what happens moving forward. But let's see. Tomorrow we've got Australian GDP figures. We've got some Chinese PMI figures, which will tell us what's going on with the Pacific region of the world and how those economies are doing. All right, we've also got some more news from U.S. tomorrow, ISM manufacturing numbers and ADP employment change. All right, and then Friday we've got the granddaddy of them all, the non-farm payrolls here in the U.S. So that's really going to give us a glimpse into how the U.S. economy is faring. All right, and where we are along the risk-taking, risk aversion metrics. So that's what I'm looking at for today, folks. Looks like a pretty strong open. So let's see if we're going to get follow-through throughout the day. All right, good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.